Hello everyone, and welcome to today's Forex webinar, the first of the new year. And thank you as always for your patience. We were just checking all the audio, and before I start, could I possibly ask you if you can hear me okay? I know obviously if you can't hear me, then it's a bit silly thing to say. Hopefully you can. Oh, that's brilliant. Thank you. Lovely. Thank you so much. Thank you. Right. Before we start, because there is so much to say and cover and share with you today, can I just draw your attention to the risks disclaimer that you can see on your screen? I know you've seen it many times before, but it really has to be said and reiterated. This can be a very risky business. Please don't think of using money that you cannot afford to lose. It is very easy to lose all of your money, and in some markets you can lose more money than you actually started with. So let's get that out of the way and welcome you again. As I said, it's the first of the of this session for the new year, and my goodness, sometimes when I was sort of preparing for this morning, I thought, now, where shall I start? What shall we look at? Because so much seems to have been happening in since the last time we were here was just before Christmas. And I think, if you're like me, I think I'm quite tired actually. I think a lot of traders are exhausted with all that's been happening in the markets, which is good because we need things to be moving. It's all a bit quieter this morning, which is no surprise because markets can't keep at the levels that they've been, the heightened levels that they've been at, certainly since, well, after Christmas. The space between Christmas and New Year and last week was pretty spectacular by any standards. If this is the first time that you are with us, David is with me. In fact, we've changed our configuration so I can sort of see him just between a couple of my monitors. I can peek at him. So it's a little bit difficult for us to communicate directly. I just have to sort of see him through the monitors. I'm going to pass over to him and he can say hi as well, and then we will start.
Apologies, I was just on the chat with one or two people. Sorry about that. Hopefully you can hear me too. Whenever we start new sessions, we always have to readjust our headset. So that's the reason we were late this morning. So apologies. And apologies for my sounding a little bit like a drain, a bit better than last week, but still getting over a horrible cold. If this is your first time with us, a very warm welcome. I know we have a lot of regulars as well, so warm welcome to you too. If you have any questions, please just drop them in the chat box. Happy to answer them there. If they're longer questions, we will answer them on air for you. Primarily, we'll be on the MT. Are you on MT4 or MT5? Primarily be on MT5 with Anna's screens, but I've also got the NinjaTrader running as well, so we'll flip-flop between the two and see what we can find. It is a little bit quiet this morning. But then, as Anna said, no great surprise after what's been going on over the last few days. So we'll see what we can dig out anyway. I'll pass back to Anna, but I'll be here as well.
To cover what, if you like, what is the main basis of these webinars, and that is to look at the markets, and in particular the Forex market that we're looking at in this session, through the prism of volume price analysis with our quantum trading indicators. And if volume price analysis is a very new methodology to you, it's all explained on the books on Amazon. This is the main book which covers all the markets, and there is also a book called Forex for Beginners, which includes details of the methodology and how we apply it to the Forex market in particular. But the technical analysis, VPA, is just the technical analysis element of, if you like, our trading approach, our trading education, because no market just moves based on what is going on that you see on the chart, and you can apply indicators, and you can apply proprietary indicators, standard indicators to give you an idea of where you think the market is moving next. All the markets are interrelated, and for the Forex market, not only do we look at the technical picture that we see on the chart, but we also have to factor in things like the fundamental news, although lately fundamental news seems to be taken very much a back seat given given all the politics that is going on around in the world, really. Here, obviously, in the UK, we have Brexit. In the US, we have the ongoing war of words dispute, if you like. You've got the tariff wars between China and the US, and you also have increasingly, as I said, right back in the beginning of December, end of November, when I kind of said, please, be aware, listen out for what may or may not be going on between Trump and the Fed. And that has certainly blew up just before Christmas, when the Fed increased interest rates, as they said they would do, and then last week kind of rode back because of all the volatility and the gyrations that we saw in the stock market. And I said at the time that the Fed is becoming politicized. In a sense, it shouldn't be. It should be independent, like all central banks. They should set the monetary policy in what is in the best interest, they believe, for the economy. Whether they're right or wrong is neither here nor there, but that is the theory. And I said at the time, what to look out for, and I said, look for the Fed, see what the Fed is doing, and in particular what Trump would be saying, and the rest is history, as it were. And obviously that has an impact on the US dollar. So increasingly, apart from the fundamentals, you've then now got the politics, but there is another element that we also have to look at when looking at the forex market, and that is what is going on related markets, because some of the currencies are very much tied to the other markets, for example, the commodity currencies. And if you're very new to forex, to this business, it can be really overwhelming and really confusing. We all start with the technical picture, but gradually we begin to realize that we have to factor in all these other elements to try and make sense of where the prices go, if what is going to happen next, as it were. But at the heart of it, in terms of the technical analysis, is volume price analysis. And even though we had reduced liquidity last week and we had these huge price moves, the principles of VPA still applied. We just have to look at them in a more nuanced way. We have to factor in the time zone that we're trading in, and also the season, but that does not invalidate the fundamental principles, as it were. And I suppose what I was going to say with this particular session, we're looking at the politics. We're also going to look at volatility, because obviously last week the volatility was off the scale, as it were. And as a trader, if you're an intraday trader, in a way, that's what you welcome, that's what you want more than anything, because with volatility, things are going to be moving, things are going to be happening quickly. And that also can impact on maybe the time frame and also the time that you are likely to be staying in a trade, because when you have heightened volatility, and volatility that's driven by low liquidity, and certainly with, as I said, with all these political factors that are surrounding the markets at the moment, you really have to be able to, as David always says, you have to be very light on your feet, take what you can, come out, and then possibly go in again. Now, what happens then if you say, well, I don't really want to be an intraday trader, I'm more interested in the medium to longer term, and I mean by medium to longer term, I'm still talking maybe days, maybe weeks. I'm not talking longer term in the sense of the stock market, because again, time is relative to the markets that you're actually trading. In the stock market, longer term could be 10 years because you're looking for a long-term investing. Longer term in the forex market, it could be a week, it could be a month, it could be two months. And when there's a lot of volatility and you're looking to trade these slower time frame charts, the thing you have to be aware of is that where your stops are going to go, can you afford to put your stops further away, and the chances are you're going to be stopped out. Now, it was very interesting, if you saw the yen pairs last week, things like the Aussie yen, I mean, there was a huge move in that. And if you were on the right side of that move on the slower time frames, great. But then suddenly, if you will look at the daily chart, and you'll see the mother and father of all hammer candles that came in. So, even on the slower time frame charts, you could have had a fantastic position, which promptly reversed in a very short space of time. And what I want to have a look at today is revisit some of the medium-term trades that we looked at about the middle of December. It was some positions I had in 3 pairs with the New Zealand, and see how long it has taken for those to develop into the levels that they are at the moment. So really, I suppose if you can sum up, we're going to look at time, volatility, and a little bit about the politics, whilst at the same time looking to see what is happening on a short-term basis, which I think David has been looking at. I think he's been looking at the Euro Aussie, which I have here, which is a great example of a pair which I'm actually looking at for a longer term, much longer term position, because it happens to be at the top of the heat map. But he's also been looking at it from a long position, David, on the short term, although it seems to have gone into consolidation at the moment. So that's sort of been. I'm on the pound yen at the moment. And he's on the pound yen at the moment. So I'm just going to pass over to David and see what he wants to add to what I have said.
Thanks, darling. The one thing that I would, or several things actually to add to that, if you were trading at the time that the flash crash actually happened, whatever the reasons, 2 things struck you instantly. First of all, that it was an extreme. The actual move, we were talking several hundred pips in a matter of minutes. By any stretch of the imagination, that is extreme. But what it also tells you is that the probability is that it is just a complete and utter overreaction. Whether you believe that it is the market makers taking the opportunity to frighten the life out of everyone in a quiet period between two holidays, and to move the market dramatically on what was significant news, but certainly not as dramatic as that, cataclysmic almost. The inference from that is that whether you subscribe, as I say, to the market maker approach, or whether you subscribe to it being influenced by related news around Apple or around China or whatever may have been ascribed to that particular move, the fact of the matter is that when you look at the volume associated with it, either from an intraday perspective or indeed the daily, and I've got the daily pound yen, just happened to be on the pound yen across the time frames, but you can check this out on all the yen pairs pretty much. The actual volume associated with that move is ludicrously out of balance. It makes absolutely no sense at all. Now, clearly you have to caveat that with the fact that it was during a holiday period, so you would expect the volume to be relatively light, or certainly lighter than normal. But given the extreme move, the volume is just nonsensical. It makes absolutely no sense at all. It's an anomaly that really defies the word anomaly, to be perfectly honest. So when you look at it from that perspective, is it a massive, massive exodus of selling? Answer no. It's a trigger to take a load of stops out of the market, to frighten the market to death, to take an opportunity in thin liquid markets to really move the market very rapidly and then reverse it. And indeed, I posted up in the VPA Traders Forum at the time, I said, look out for the reversals because they will come, and that's where you get your trading opportunities. Now, after such a savage move, it can be very difficult to align in the opposite direction, but align you have to, because the volume is telling you that this is not a valid move. This is anomalous. This is not heavy selling. This is just a trap move. This is just a frightening the life out of the market move. And therefore the probability is that the prospect of this market will reverse, and reverse quite strongly, which it has and continues to do so. And that is now all backed up by a reversal in risk sentiment, where we've now got risk on. You know, the sun is shining in the markets again, following the interest rate statement and the pullback, as Anna said. So we're now seeing a complete reversal, and we're now seeing all that move wiped out completely, and we're back above the level before it actually started. Let me pass back to Anna. She's got some, this is a really nice chart, the New Zealand CAD, and we're going much more towards the slower time frames, which is nice, just to make a change, mixed up a little bit. So I'm going to pass back to her.
All right, this is the New Zealand Canadian, and really these. I'm not going to go over the what we've been saying about it since I think since the beginning of December, because it's pretty much chronicled on my Facebook page and on the Quantum Trading Facebook page, and it was really, it caught my eye, as I said, way back in the where is it? Where's it gone? Where's it gone? I've lost it now. Where's my? I've lost my okay, my heat map. Oh, here it is. There it is. Oh, sorry about that. Apologies about that. All right. It's chronicled on my Facebook page and also on the Quantum Trading Facebook page. And I was really fascinated by this pair because it was at the top spot of the heat map that we see here. For days, it just seemed to be stuck at the top, and I'm thinking at some point this is going to turn. This market is fantastic at forex because it is a mean reverting market. It's, you know, there's an overextension, things going to overbought, things going into oversold, and as traders, most of the time, what we're looking to do is we're looking to buy low and sell high, and it was just a fascinating pair from the perspective that the time it took to actually stay at the top of the heat map. And in fact, this is the level that it kept hitting, which was 92.39. And we can see here it had sort of multiple attempts to go through this level. This followed a very nice long run up for the pair. It hit this level and it just kept bouncing off. And you can see here the number of weak candles that we had. We had weak candles in the sense that they have wicks to the top side. You saw that. Well, that was the first signal. And you thought, oh my goodness, a lot of volume underneath that, you know, reasonable volume underneath that candle. Oh, right, it's now going to reverse. Then it happened again. Then we got an even stronger signal because we had another weak candle here with a deep wick to the top of the candle. A lot of volume underneath it, and also eventually it also had a pivot and a fractal as well, and you think, oh great, it's now going to reverse. It did actually reverse, and as you can see under here, it was volume, but not a huge amount of volume. And then what did it do? We had that became a 2-bar reversal, and it went back up and tested again. And this is the daily chart, so you have to, you know, what I'm trying to say here is, depending on the time frame that you are trading, you have to allow signals, if you like, room to breathe, room to develop. But this was as I said, I must say this was particularly frustrating because it kept hitting this sort of region, and then it kept falling back with volume underneath it. Then you'd have a down bar, and you think, oh great, now the move is going to be underway. Because if you look at this sequence of candles up here, you think, yeah, that would make you know, there's absolutely no reason why that isn't going to carry on further. And then suddenly it goes shooting straight back up again, hit the level. Volume underneath there that we see there is not, for the size of that candle, the only thing I would say is, given the range of that candle, the spread of that candle, and the volume that's underneath it, it would at least have given you a degree of comfort, because if we compare it with the volume under one of the other up candles, it wasn't quite as much. So you think, well, you know, that is anomalous in the sense that for a move of that magnitude, you would have expected a lot more, you know, a wider move. Sorry, you would have expected more volume to confirm a move of this magnitude, and it didn't. And in fact, the next candle, you had it was a down candle with a reasonable amount of volume, and in fact it created a 2-bar reversal, and that was really the beginning of the move lower. Now at the time, on the heat map, this pair was still at the top. Then it went into this sort of consolidation phase. We were moving into to the Christmas period, and then it eventually rolled over. But what I'm trying to say here, it is the time that this took to develop. And if you then look at the weekly chart, because obviously with the daily, that's what you want to give it some context, you can see here, this is the weakness that we kept seeing. So we knew it was going to roll over, but and this is where we also have to factor in patience, and patience is probably the most difficult thing for us as traders to try and develop as a virtue. It is because we are so, we see something, and especially with volume price analysis, with the with candlestick analysis, it is very easy to think, oh great, this is it, I'd love to be able to jump in, I know it's going to go in my way, I know it's going to go my way, I want to get in there early. But given the price action of this particular pair, what would have happened is you would have gone in on a regular basis and you would have simply been stopped out. And in fact, if we look at the monthly chart, what's interesting about the monthly chart, as you can see here, this was the huge up, the move on this big up candle here, and we have like a doji candle here, and now the move is actually well underway. And the next question is, well, how far is that likely to go? If we go back to the daily chart here, and this is where you have to look at levels, however you define your levels. I've got the Camarilla level here. I haven't got the VPOC on here. I can add the VPOC. I've actually added lately, I've been looking at, David doesn't use moving averages. I'm always fascinated by moving averages, more so because they are mentioned so much in analysis that you read online across all the markets, and they never seem to, but what they never seem to specify is whether they're simple, exponential, there's lots of different varieties. But I've recently started to look at this called the fractal adaptive moving average, and the reason I've been very interested in it is because I came across some research that some academics had done, and of all the moving averages, it seems to be, if you like, one of the it seems to have some merit to it. And all I've got is the 200. I've just used 200 because everybody uses 200, but I'm looking at this. If you want to explore further on MT5, it is actually one of the standard indicators. Now it's below this 200 MA. It's obviously very bearish. Now the volume down here, we can see looks to be falling, but again, we have to consider last week where we were in seasonality terms, and what we'll need to see at the end of this week is how this sell volume comes in under this candle as the market gets underway. And moving back to the heat map, where it is on the heat map is spot 13. In fact, the other day it was at spot 8, so it's had a nice big fall down to spot 13. So I'm using this as kind of tracking just to see how all these signals play out on the slower time frames. And the pair that I'm also looking at the moment is the Euro Aussie. But as I said, it's let's see where it is at the moment. It's still very much green on the weekly and the monthly, and it'll be interesting to see at what point we would be able to consider taking a short position in this particular pair. When I was looking at the New Zealand CAD, it was one that I was considering along with New Zealand dollar, New Zealand Swiss, and Aussie CAD. And in fact, I opted not to enter that one, and I opted into trades for this was the little basket of trades that I put on, and I did very nicely, thank you very much, and actually closed out. I didn't go back in, but it just wasn't, I got sidetracked into other things. But it's interesting to see that, Christmas, yes, I got sidetracked by Christmas shopping. But of the three that I was in, it's interesting to see the Aussie CAD as actually was the best performer, which also brings me to this other issue, and that is I was in those positions. I took the number of pips I took was 300 or something, David. Something like that, it was a nice number of pips over a relatively short space of time, again days rather than weeks. Now I go back and revisit the chart and I think, oh, I could have stayed in there. If I'd only stayed in there, I could have made 600. And trader regret is something that we really, really have to just get away from. I was in there, the market gave me the pips, thank you very much, and now I've moved on and I'm looking at another opportunity. If somebody else has gone in there and made money on the Aussie CAD, good luck to them. But if trader regret is an emotion that you perhaps are experiencing or are struggling with, you really do have to say this, you do really have to get over it. Is there anything you want to say, David, to that?
Absolutely. Just talking about the heat map, it's an awesome indicator. It's absolutely fantastic, and you can use it in lots of different ways, but the way we tend to use it is very similar to the way we use the currency strength indicator, particularly where we're looking at extremes. It's on the currency strength indicator, you're looking at individual currencies per se. On the heat map, you're actually looking at the currency pairs. And for those of you who have it, I would urge you to just keep an eye on it. You may not trade longer term time frames. Now, what's interesting at the moment, as I say, we use it looking at the extremes. That's the first thing we look at is, what's going on in the extremes? What are those charts looking like? What is the volume profile looking like? Etc., etc. And the other thing about it also, if you look at it right now, down at the bottom, certainly in terms of the yen pairs, which have taken a bit of a battering. But what's interesting now, if you scan across on the Aussie yen, which is spot 28, you can see those cells starting to turn green. I mean, we're green out to the 4-hourly now, and you've got bearish cells on the daily, weekly, monthly, exactly the same profile for the pound yen. Slightly different on the New Zealand yen, which is at spot 25, but nevertheless a similar sort of feel to it, that the yen pairs per se are starting to align into possible long positions following the recovery from the flash crash, etc., etc. Up at the top, you've got the inverse. You've got the Euro Aussie. You can start to see that bearish sentiment is beginning to work its way out into the slower time frames. It hasn't gone through to it's got the daily, but it hasn't on the Euro Aussie. Certainly, you've got the hourly and the 4-hourly are still green. Pound Aussie, a little bit spotty, but similar sort of picture. The Euro Pound is pretty much red. Well, it is red right the way through to the daily. Euro New Zealand, less so, but that may well join the others in terms of the changing color from red to blue, from red to green rather. And that's the way we look at it. And then you can also use the bookmark. Those purple notation is a bookmark function. You just literally toggle those particular currency pairs that you want to keep an eye on, and you just change the color on them to purple or your chosen color, and then you can just bookmark them as you would anything else. You can just see where they are in the ranking ladder. So it's a fantastic indicator. It is very much aimed at the slower time horizon. This is not something that you're going to be looking at every 5 minutes. If you're an intraday scalping trader, this is not the indicator for you. But if you're trading slower time frames where you're happy to take positions which run over days, then it certainly is. But in addition to that, just in terms of the matrix itself on here, it will give you a heads up as to what that sentiment is doing from the fastest time frames out to the slower time frames. So even as a scalping trader, it will give you some background information very quickly without scanning through all those particular charts, just to give you a sense of whether that particular pair in the faster time frames is bearish or bullish. So I'd urge you to go and study it in more detail. As I say, it may not be directly relevant for you if you're an intraday scalping trader. That's your preferred modus operandi. But if you're veering towards the slower time frames, slower perspectives, I would urge you to study it in more detail and take a closer look. Just going back to the New Zealand CAD daily and weekly charts. There we go. Actually, I think it was the weekly chart. Could you pull the weekly up, darling? Sorry. Just going to the weekly for a moment. Looking at the volume profiles on the weekly. That's it. Got it. What's interesting is when you look at the volume profile on this pair from sort of October onwards, and you compare it back to earlier in the year, look at the volume as we started the year in January and February, and then compare that with what is happening in October, November, ignoring December, the latter part of December, because it's seasonal. But if you just compare those two regions of volume and you look at the candles and associated volume as that pair rises, it gives you a sense that what you're seeing, certainly where Anna's cursor is there, for example, you've got a widespread up phase of price action on the week, but look at the volume. Is the volume aligned with that price action? Well, compared with what went on earlier in the year, the short answer is no. It looks very thin. It looks very suspicious. This market is not rising on lots of buying. It's just not there. So it's a question of being patient, of looking at all the other indicators, looking at the price action, looking at the associated volume that follows thereafter, bringing in support and resistance, the volume point of control, looking at the Camarilla. Where are we on the Camarilla? You know, we're breaking on this time frame. We are, if this holds below the S6 level, then, you know, we're going to see a further downtrend in the market. And then what you're looking at is obviously, where is that market like to stop? How far, what's my expectation in terms of taking a position in this market? Yes, and Anna's got her 200 MA. I don't use moving averages, but it in a way, it just tells you that, you know, we've been married for a long time. We work together, we trade together, but, you know, we have slightly different styles and we have different personalities. That's just trading, and there's no right or wrong way. It's just what works for you and what you're comfortable with. I don't use them, Anna does. So you've got the 200 MA there. In terms of other potential stopping points or pause points, you've obviously got some price action that's going to maybe cause the market to pause a little bit lower down in this sort of region here where Anna's cursor is. So in terms of opportunity, that's the first point which is likely to cause the market to pause. If it goes through there, then, you know, boy oh boy, it could go all the way back down to that strong support which is down at 84.54. So, you know, there's 400 or 500 pips opportunity there, possibly. So, you know, that's what you're looking at the whole time. You're looking at the opportunity. What's the travel on this position? What's my expectation? What's the chart telling me? What are my indicators telling me? You'd be looking at maybe the weekly CSI, you know, where are we? Where's my currency? You'd be looking at the heat map, etc., and putting it all together. Just going to pass back to Anna.
Yes, we always have we was having words about that. See, I tell you, it's stuck to the 200 MA.
There's a nice move developing on the Aussie dollar, by the way.
I will go over to the Aussie. I have got the Aussie dollar. The Aussie dollar is one that we've actually been looking at, and in fact, in all seriousness apart, or joking apart, you know, those of you who know us will know that we may not take ourselves very seriously, but we do take what we do, this business, extremely seriously. So for those of you who don't know us, I just thought I'd make that clear. Right, getting back to levels very quickly on the New Zealand CAD, that was on the weekly. We've actually got a very strong level here at 89.28. Then we've got the S4 down here. But however you determine your levels, this, you know, that's what you would be looking at now, and as I said, moving forward. And also, if this move is going to continue, you may also be looking perhaps at a re-entry. And with re-entry, we've talked about them before. We do have to look at very specific sort of candle and volume configurations. But I just want to stop there because I know David wants to have a look at the Aussie dollar. But before we do, from a fundamental perspective, very quickly on talking forex, just bear in mind that for the Aussie dollar today, there's a very, very large option expiry. This is from my Talking Forex feed. There's a very large option expiry on the euro dollar, not so much on pound dollar, but Aussie dollar, very, very big. It's 1.3 billion. Now, that is a big number. Primarily, it is a big number anyway, but it's a big number because on Aussie dollar, it's not a huge, it doesn't take up a huge slice of this market. So whenever you get anything over 500 million, 750 million, certainly going into the billions, it's going to be important. And the option expires will create additional levels that these pairs have to go through if the move is to continue. And what they do also, they hold up moves, as it were. I'm just going to pass over to David. Have you got that ninja there, David?
Yeah.
Darling, okay, fine. Let's move over to you. Got it?
Yeah. Should be coming. Should be seeing my screen right now. Hopefully you can. And let's just move the chat box out of the way, down there. Here we go. I've got multiple time frames here. I've got the 5 minute. We're back into intraday scalping. I've got the 5, the 10, the 15 across the top. Down the bottom here, I've got 30. I've got the Renko running as well, and I've got the Aussie dollar on the daily chart, bottom right as well. And it's just a nice example. If we start, as always, with the CSI, hop over there. What's going on? You know, that's why I picked it up down here somewhere. The dollar was rolling over this red line. The Aussie, the blue line, is starting to rise quite strongly. So we've just got a classical move. You wouldn't even need to look at the chart to know the trend was developing and underway. We've got a crossing here, so we've got the blue crossing the red. The trend is in play, and it's moving very strongly because the Aussie is rising very strongly and the dollar is falling very strongly. And that's the ideal combination, because that will then drive momentum into the move, because you've got buying of the Aussie on one side and that is counterbalanced by selling of the dollar on the other. It's as simple as that. And it's just going and hunting these out in all time frames. The decision you've got to make is really whether you prefer to take positions off reversals or whether you want to jump into a trend once it's underway. And the only downside of either of those decisions, if you're a reversal trader, if that's your preferred modus operandi, then you've got to be patient, because I mean, the Canadian dollar here, for example, is a classic example. This purple line, we got up into heavily overbought on, we're on 15 minute here, kicked down, then it sort of, you know, flattened off a bit, tried to rally a little bit, then finally it got down here. So through all of this, you've got to have some patience. You've got to have your stops set much wider to allow for all this buffering that goes on. You know, currencies, yeah, they do go down to the bottom and then rally instantly. You know, the euro did, it got down here and then it kicked up straight away and it's carried on up. Little bit of a reversal here, but it's basically carrying on in terms of buying. But you always have to allow for that. In terms of the trend now with the Aussie dollar, just hop over onto the charts themselves. There we go. Decision time is, you know, do I want to jump into this trend now? It's been going for a little while. That's fine. If you jump into it now, then your stop loss is going to be fairly tight because the trend is already underway. It's as simple as that. That is the payoff. It's in terms of getting into that position, you have relinquished the risk associated with getting in early, and that comes at a price. That has to be paid. It's one way or the other. You as a trader have decided that you don't want to put that much risk on the table. You're more comfortable jumping into a trend that's underway, and the quid pro quo is that your stop loss can be that much tighter. Maybe it's 5, 6, 7 pips as an intraday scalp. On a risk reversal trade, it might be 15 or 20 pips maybe. So 2 or 3 times the amount of risk on the table. That's a decision you have to make. I can't make that for you. You have to decide what it is you want to do and how you want to do it. If you have patience as part of your characteristic makeup, then, you know, absolutely fine waiting for reversals. If you find that you are not very patient, then perhaps you're better waiting for trends once they start to develop and move away. Got some nice price and volume associated with here. There was a lot of, there's lots of lessons here, not least of all multiple time frames. You look at the trend monitor, for example. It was bright red here, then we went into the transitional phases on 5. Now we've gone into bright blue on 5, which is what you expect. The trend is underway. The same on 10 minute. Bright red into transitional blue, out the other side into bright blue, and now the trend is underway and being confirmed on that. We're rolling across onto 15. What have we seen here? As you would expect, it hasn't actually transitioned right the way through yet, but it is in the process of, because we've gone to darker red. This may go to dark blue and ultimately through to bright blue if this trend continues to establish itself. Alternatively, it may go straight from here into bright blue. There's nothing in the rule book that says we have to go through the full sequence of colors of bright red, darker blue, brighter blue. Sometimes it skips one of those. It just depends on the price action and the speed the move develops. Down onto 30. Not a flicker. We haven't seen any change here. We wouldn't expect to because it's too far out in terms of time frames. The Renko is helping to define all that. And you've got exactly the same process going on here in terms of transitions on the trend. And then down onto the daily. Oh, sorry. I think I've just clicked that one off. Where have we gone? Have I lost it? No, there we go. Sorry about that. That's the chat box in the way. Let's get that out of the way. There we go. Okay. And there we are. That's on the daily, and you wouldn't expect to see anything different there in terms of the trend monitoring rate. And just talking about the volume, I mentioned earlier on, this is the flash crash. I mean, look at the volume associated with it. It's just nonsense. You've got more volume over here, for goodness sake, on this up candle. So it just tells you straight away that's a complete fake and not to be trusted, and expect a reversal, which has duly come almost immediately. So there we go, on we go, and we've been trading around the volume point of control. We're breaking away from the volume point of control. Let's pop the 10-minute up. Nice example of rising volume, rising price action. Very nice, thank you very much. You know, that confirms all that. Where are we going now in terms of the likely pause points on this chart? Again, going back to what I said earlier on, this is the volume point of control. So you've got the low volume nodes here. We had a low volume node here. We've gone through that pretty quickly. So we've got another low volume node here, which if it's approached, then we would expect the price action to move through there relatively quickly. However, what we've also got is some very solid price. I mean, just eyeballing it over here, we've got quite an amount of price congestion that's sitting here waiting ahead of us. This red dash line up here is also confirming that this is very solid potential price resistance if we get to that level. So in terms of taking a position, you'd have to factor that in. Am I comfortable with that? You know, given I've got this literally ahead of me now, are we like to see a pause? And you've got to make a judgment call on that. You'd look obviously at the different time frames, see what's going on in different time frames as well. Similar sort of situation there on 10, as you would expect, up to 15. You know, you've got this solid wedge up here. You've got these minor levels of price resistance overhead. We tested that one. We've got another one here, another one there, another one here, and then a very solid level up here at 71.48. And as Dan said, you've also got the Aussie dollar option expires as well, so you'd be keeping an eye on that, certainly from an intraday perspective at any rate. So lots going on there. Let's just head back to the CSI. That's fine, and obviously you'd have this on different time frames as well. Let's just drop that down to see what's going on the 10-minute. That looks fine. Still climbing, still falling nicely. And you probably have the 5-minute up as well. Let's go back onto the 5. And on the 5, what this is telling you now on 5 is that the Aussie has potentially, well, it's not reached, but it's certainly approaching a possible overbought state, and the US dollar, the red line, is reaching a possible oversold state. And what that may well reveal in terms of the price action is a pause point on the faster time frames. Now, whether that develops into a longer term reversal on your 15-minute or your 30-minute, that will then be dictated by the price action, the volume, and also it will be reflected on the CSI, which is why multiple time frames apply not only to the charts themselves, but also the indicators. So you'd have all of these up in multiple time frames because they will all tell you something. And if you're seeing this develop on a 5-minute and you're trading on maybe a 15-minute time frame, what it does is it removes that uncertainty and doubt, because it's telling you loud and clear that you're likely to see the price action pause. So why would you be fearful? Because the indicator's telling you that is what is going to happen. It removes that fear element. It removes that emotional response when you're in a trend and it starts to pause. The decision you then have to make is whether this is actually a full-blown reversal or whether it's actually a pause point. And to answer that one, you'd have faster time frame charts and you'd be looking at the volume associated with the reversal itself, because if you've got a reversal going on in an uptrend and you've got falling volume associated with it, then that is just simply a secondary pause point. It's not a full-blown reversal in the primary trend from bullish to bearish. It's as simple as that. And it's one of the applications of volume price analysis which is so powerful and which we explain in detail in the education program, because the one thing that causes traders' issues in terms of moving the trading account forward is this whole business of being shaken out early. And really, that's what it comes down to. And if you can manage those areas of price action when you've got a position in the market, you've got some profit, then the market starts to reverse, and maybe you close out because you're fearful of losing what you've got. If you can sit through those with confidence, and that's what VPA gives you, it gives you an insight into whether that pause is indeed a pause or whether it's a full-blown reversal in the primary trend from one to the other, from bullish to bearish or bearish to bullish. It's so powerful, I can't tell you, because that's the one thing that will cause you problems in moving your account forward, because this business is about keeping losses small. You'll have far more small losses than winners, but your winners have to be of a decent size. And if your winners are of a decent size, then they will completely outweigh all those small losses which accrue over time and which you cannot avoid. You have to accept them. It's just absolutely key to trading success. I can't stress it too strongly. I'm just going to pass back to Anna. We'll change screens back.
I'm actually looking at the, as I said, the Euro Aussie on my profile, and it's also a great example of, again, using time and time frames when you could be looking at a position in one direction on one time frame, but that doesn't that wouldn't necessarily stop another trader taking the opposite position in another time frame. And we can see here on the Euro Aussie, we can see on the fastest time frames down at, I've got the Renko chart set up on the far left. It looks like there's a little bit of buying coming into the euro, a bit of selling on the Aussie, and next door to it you've got the 3-minute chart, and we can see here it looks like there's a nice little move. Now, whether you want to take advantage of that move, it depends on your time horizon and time frame that you want to trade. But to look at, I'm looking at this from the perspective of that it's very overbought on the the heat map, in the sense on its ranking in the 28 pairs that we monitor. And I've got the 1 hour chart here, and the 1 hour chart tells me that really this is where patience is going to be required, because we can see it is moving in a consolidation phase, but with the levels very clearly defined. We've got 1.6 here, 6002, as where it's got to break if it is going to, if it is actually ready to roll over. Again, patience. And on the faster time frames, we've got this move higher. David was talking about where is it likely to go if it's going to carry on high. Well, we've got a level, we've got the volume point of control here at 1.6058. And moving back to the heat map, as I move over here, those of you who haven't looked at MT5, one of the nice things about MT5 now, you can actually detach individual charts from your profile and move them onto another screen, which is absolutely fantastic. It's got this what's called the docking feature on it, and it just makes life an awful lot easier if you use multiple screens, and you can sort of move your charts about. And what you'd also be looking at is you've got the Aussie yen down at the bottom, and you've got the Euro Aussie at the top. And if if it's a buy on the Aussie, then you could possibly look at a sell on the Euro Aussie and a buy of the Aussie yen, and you would be aligned in the same direction because you'd be basically buying the Aussie. And the Aussie is also going to be influenced by what is happening in China. It's a currency, as I said, right back to the beginning, I said about understanding the relationships that individual currencies have with different markets, and with the Aussie, it's very much China. And I think we've got some talks going on between the US and China, and the markets will be very keen to hear that maybe things are going to be smoothed out, and no more trade wars, and that will certainly give the Aussie a huge boost. And if we look at the CSI on the daily basis, as I said, it's not just based on one indicator, one chart. Let's have a look here. Hold on a second. There we are. Move that to the daily chart and expand that. Let's have a look. Let's move this out of the way. It's causing problems. There we are. Don't know why it's not. Oh, I got that docked as well. Let's have a look. Let's undock it. Yes, sorry, I had that docked. When you have it docked, it's you can't actually change the time frames. You have to undock it. There we are. And this is what you can see here. You can see the yen is rolling over because we've had better, more positive market sentiment, and we've got the Aussie down at the bottom, which is also turning up. And that also explains why the strong move that we had, the selling of the Aussie, the buying of the yen, as reflected on the heat map. So as I said, two pairs that we will be watching. Is there anything else you want to say to that, David, or is that it? Right. What I've also got to add for today is I was talking about the Fed earlier on, and some of you may not have come across this site, which is well worth a visit, particularly to find out what the whole Fed Trump situation and what they may or may not be doing. He's an academic. He's over in Oregon. I think he's at the university there, and he produces this blog. It is very, very readable. Trying to make sense of macroeconomics is, when you start, can be very, very difficult, and it's very important that you perhaps go to resources that explain things in a very straightforward and a clear way. We certainly have a whole list of resources on the program, also in the book, The Three-Dimensional Approach to Forex Trading, which is really to do with fundamental and related markets. But this blog by this guy is very, very worthwhile. And can I also give a shout out to someone that I've got to know over Twitter, and I'm hoping to meet John at the end of this month. He's putting a little get together of economists and traders and analysts and what have you in London. He is a senior lecturer at, is it the Institute of Banking? It's some august body in the city of London. Yes. Huh? Yes. Institute of Banking and Finance. Institute of Banking and Finance. He's a senior lecturer there. He's a really, really nice guy. And as I said, I'm hoping to meet him. He's actually put together a really nice video on his Twitter feed. His name's John Hearn, and he explains Keynesian monetarist debate. Now, that sounds a very dry title, but it really does. It's at the core of the belief systems that drive economies and central bank policy. If you understand, where they're coming from, why they do what they do, then it kind of helps, makes life an awful lot easier. Anything you want to add to that, Diane, or is that it? That's it. Fine. Yes, as I said. Now, with regard to the quantum indicators, this will be the new homepage for quantumtrading.com. It's still in beta. It's just being added to. We've made it much, much simpler. As you can see here, the indicators for MetaTrader 4, 5, NinjaTrader, and TradingView. We'll also be adding ones for TradeStation, but that will be later on in the year. We made it much easier to navigate into the website. Ignore what's written at the bottom. You can buy individual indicators, they're bundled deals, or you can invest in the full package. And one of the advantages, the main advantage of investing in the full package, is that whenever we develop new indicators, they are added to your package for free. And with regard to the education program, this is on another site. It's at quantumtradingeducation.com. And here's David and I. We're not here, we're not at this location today, we're somewhere else, but this is basically the kind of setups we have. We've got so many monitors, I've lost count. I'm either use 2 or 3. David just tends to use 1 or 2, and all the details of the program are there, the different modules, what they will do for you. It's a very, very comprehensive package, and to date we're very proud of the fact that every trader that has invested in the package. We do offer a refund on the indicators and on the program, where we're very proud to say that we haven't been asked for a refund yet. So, as I said, I hope. And it includes all the indicators. Oh, and as David's just reminded me, it does include all the indicators as well. Getting back to quantum trading, this is the inside of the site. There are videos, there are support pages on all the indicators there that you can if you want to discover more. There's also lots and lots of videos on our YouTube channels as well. And just finally, very quickly, where's it gone? Nothing seems to be working very well this morning, so I do apologize. Let's try again. Just want to show you, try again. No, it's not cooperating, I'm afraid, David, sorry. Basically, if you need any more information, you can drop us an email, either anna@annacooling.com or david@quantumtrading.com. Any more questions to answer, David, or is that it? No, that's it. I think we'll wrap it up for today. We're back on Thursday. We've actually got 2 sessions on Thursday now. We've got a session for Forex, but just NinjaTrader, which is around the US Open. And then we have our usual session later on in the afternoon. And it's really a day trading, what we call day trading session. And it's the indices with some commodities. So if you want to come along to that, you're more than welcome to do so. The sign up is at my site at annacooling.com. So thank you so much for coming along today. I hope you've enjoyed it. I hope you've perhaps discovered something that learned something you didn't know before. And we look forward to you joining us the next time, whenever that is. And if you're not Thursday, and if you're not joining us, perhaps not until next week, have a great trading day, have a great trading week, and you know, what was I going to say? I forgot. Have a lovely day and a lovely week. Take care. Bye.